Hey traders, happy Sunday. This is Ron Hayden, Market Tamer. Hope you guys are having a fantastic weekend. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk, and specific financial issues should always be addressed with your financial advisor. We're going to do a weekly versus a daily view on the major indexes. We'll start off with a daily view of the S&P 500 ETF, the SPY. Every candle represents one day in the market. We can see the big gap down on Monday, closed near the lows of the day. It was not looking good. This was the target, but we were way outside the Bollinger Bands, the lower Bollinger Band in green. And I said, we're probably going to see some sideways action to resolve the oversold moving too far too fast, because 90% of the data typically falls inside of the Bollinger Bands. Well, we're outside of it. So what happened? Tuesday sideways, Wednesday sideways. These are bigger candles, but still not a whole lot happened. Thursday gap up, closed near the highs of the day. We got above the 50-day. That's a good thing for the bulls. But we couldn't get back above the red either. That would have turned the daily chart bullish. Did not happen. Friday, we closed lower. And what's interesting about Friday, just to gauge the confidence in the bulls walking into the weekend, they didn't have it. They would not close it higher again into the weekend. They wanted to take some maybe short-term profits off the table, take some capital off the table, and as a result, we closed, by zooming even closer, below the orange line. Walking into Monday, on the daily chart, the bears have the technical edge. As of right now, this is a flagpole and this is a flag. This is still bearish. However, if I go to a weekly chart, 2 years, and then I go to weekly, now every candle represents 1 week. What I want to watch on the weekly is the red line. This is no longer a 20-day EMA, it's a 20-period EMA. As long as we stay above the red, the bulls are in control of quote, the 20-week trend, if you will. If we get below the red, we want to watch the orange. That's a 50 period. We get below the 50 period, which ironically is exactly what halted the sell-off in May. That's what turns even the weekly charts bearish, and the bulls have lost all their edges. If you look back here in October, we came down and hit the weekly in orange, held it, lost it in the middle late October, and then we tried to rally, but look where we got stuck. Could not get back above the red, and then the bottom fell out. There's no guarantee the same thing's going to play out over here, but the point is, once we lose the red and the orange, they both need to be regained for the bulls to have an edge. Did not happen, and down she went. I mean, here we even had bearish engulfing the first week of December over the previous week in November. That was a huge deal, and then boom, down we go. So that's what we're going to watch here. So if you want to put alerts just for fun at 277 right now, which is where the 50 period moving average is. We close below there in the next week or two. Not good. All right, so now let's go back to the daily, 1 year daily. Again, starting the week, we are bearish on the SPY because that's what the technical chart would say. That's it. The chart's just telling us what's going on. Now, if your question would be, well, what would it take for the bulls to get the edge? Not only do we need to get it back above the 50-day, which we were Thursday, we got to get back above the 20-day EMA in red. We get back above both, all-time highs become the target. As of right now, again, bears have the edge walking into this week. Really quickly also, I keep getting questions on profit charts. I am using profit charts on Thinkorswim. I don't know why some of you do have it, some don't. Maybe they're doing some kind of phase out, which they said they wanted to get rid of profit charts, but Thinkorswim's profit charts to me are way better than the regular charts. So once I lose access to profit charts, I'll be moving over to TradeStation, which also has a really nice technical platform to use. So don't know why some do, some don't, but I still do. Fingers crossed. I keep getting access. Now, Dow daily, 1 year daily. Here's the sell-off, the attempt at a rally. Again, Dow would need to get back above the 50 and the 20 to be bullish. Target all-time highs. Otherwise, flagpole, flag. This is still bearish. If we start closing below the intraday lows here around 255, the May-June lows at 247.50 would be the target. If we do a 2-year weekly on the Dow, look how it basically tagged, T-boned right off the 50 period, right there, and right back above the red. So the Dow on the weekly, still bullish. Let's take a look at the Qs. Since we're on weeklies, we'll stay here. Qs in the weeklies, back above the red. Qs are bullish on the weekly, the longer term charts. The daily charts, just like the Dow, just like the S&P, we are back below the 50-day. This is how, momentum shifts. The dailies fall first, and then the weeklies fall before the bears get a big upper hand. So far, the bears are only winning on the dailies. So we'll see what happens Monday. I'll be back with you with a video, and Tuesday, Wednesday, etc. The Q's got to get back above the 20-day to be bullish. Otherwise, watch 180 on the QQQ, and then it goes back down to the June low around 170. How about IWM? This is the Russell 2000. These guys are just bearish. They haven't been rallying back to their previous highs. Big trading range, 160 down to 145. If I zoom in, there's the sell-off. Almost got back down to the May lows pretty quickly, and the rally here has been pretty weak so far. They would need to get back above that 153.5 or so. Then the target would be back up to the most recent high. But these guys still very bearish. MDY on the daily charts, same thing, bearish. They couldn't get back above. And then if you go to the weeklies on the mid caps and the small caps, same thing. They're below their 20 period on the MDY, and same thing on the IWM. There you can see it there as well. On the weeklies, this is what I was talking about in some previous videos. The Russell on a weekly chart basis, a close above 160, target 170. Close below 145, back down to the upper 120s. The IWM to me is more tradable based on technical analysis than MDY, so we'll keep an eye on this. All right, now let's just take a look at some other daily charts here. We're going to speed things up. Let's just take a look and see how the banks are doing. XLF is the ETF. If I zoom in, this is pretty much a pretty bear flagpole. You can see the big volume sell-off. Bears definitely having the edge here. They need to get back above the 20 and the 50-day here. If they do, previous high is the target. Otherwise, it's not too much lower before they hit 26, but that would be the downside target. So if banks are looking bearish, S&P is probably not going to be doing that well, which isn't on the daily chart. Here are the transports. We zoom in, sell off, trying to rally, same thing, get back above both moving averages to be bullish. Otherwise, target down there at 175. Look at SMH. They hit new all-time highs on the 24th of July, and then it was down. The semis were playing hot potato with the 50-day. They broke it on Monday of last week, tried to rally, but they're still holding the 50-day. On the daily chart, they're bearish because they're still below the 20-day. The bulls don't get the edge here. Above the 20-day, they do. We take out the 107.50 low, which would have been on Monday, then we come back down here for a target. So pretty much all falling into place, matching the indexes. Here is Amazon. We're looking at Amazon and Apple. Amazon, bear flag as well. It's a long ways off from, it's $100 away, essentially, from closing it back above the 50-day before it could be bullish. We might have a bit of a trading range going on here. We'll see. But the real one to keep an eye on here, I think, is Apple, because Apple is one of the most widely held institutional stocks. I talked to you guys about this before. Sort of how goes Apple? The markets are probably going to, do that too, to a degree. But here's the interesting thing: Apple is almost back above its red line. If it can do that, it goes bullish on the daily chart. If it gets back below the Monday gap lower and close lower, and that low is 191.85. Bad news for Apple, probably bad news for the market. And the target was right back down here. And then last but not least, I just want to send you home with one other stock maybe to keep an eye on. I came across this one in my research this weekend. It's only a $6 stock, but here's the interesting thing, why I sort of like or geek out over technical analysis. Because it tells us what, who's winning, bulls, bears, what's the sentiment, what's the mentality of those traders. Are they buying, or are they selling into certain levels? And once we lost the 50-day on this little stock, Sientra, back in October, a year ago, it never closed above it. Now, never but once. If I zoom in really closely, you can see it tried to flirt with it here, but it actually didn't. So it hasn't closed above the orange. We have now on Friday, and there's a pop in volume. Nothing says the stock's going to regain any one of these previous highs. But you think about it, a year ago it was in the 20s. It was just at $5 on Friday, and something technical happened. A spike in volume and a close above major institutional moving averages, the 50-day. The target, there's a little bit of an unfilled gap here, just over 8. Then you go back up here to 9. Then you go to 10, another gap at 11. The potential stop here might be a wide one, but it would literally be Friday's lows. Close below there, which was 496. A close below there would stop this one out. Once it starts getting a little higher, if it can, then I would switch to a 20-day EMA in red. So that's it, something new to look at. I'll be back with you guys for videos each day of the week and keep you posted on what I am seeing in the market. So have a fantastic rest of the weekend. I hope these videos help, and I'll see you next time.